Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, end of a quarter, the beginning of the final quarter of the year, and we'll talk about all of this, but I'm also still hung up on this longshoreman's thing. Let's get into tonight's video. All right, folks, welcome, and we've got a lot to talk about. The rally that we saw in the last hour or so of the day, I have to show you. I'll go through it when we go through the S&P, but there was a classic on the 5-minute S&P futures chart. It's a classic V bottom that ran to a crazy rally. I hope those of you got the indicators actually caught that thing. So let's get into talking about a couple things. I'm going to, as we get set up here, let the room start to fill up a bit. But we're going to talk about this longshoreman's thing. I am really hung up on this. I think this is potentially a bigger deal. I'm going to put a video up. Unfortunately, the Mac doesn't let me stream the desktop. I was trying to get some plug-in to work. I couldn't get it to work, so I'm going to play an open mic. So just know the voice might be a little bit off of the video. Bear with me. It's a few-minute video, but we've got to listen to this because this is going to tell us a lot about what's going on from that standpoint. So let's go ahead and get to a couple things here from the standpoint of what we saw just at the end of the session today. I was sitting here like, man, where's this rally coming from? And you know, I have to admit, last night I was writing a Substack, and I talked about it, I believe, on Thursday or Friday, but the end of the quarter window dressing, and we saw it in a big way. All of a sudden, this big bid came into the market. It's still in the market. I'm watching it. Right now, we're trading 58.18. I've mentioned this before, both in Substack and on YouTube videos. We're still seeing the market wants to stay over 5,800. It just keeps coming back up there. We get down into maybe 57, 75. I'm not even sure we got that low. I think we may have gotten in there. I'll go through all the details here in a minute, but we're just seeing a continuation. And I'll also go through the database because I talked about this in last night's Substack. The intermediate database is up to 82% long. That's 8 out of 10 symbols in the database. 15,000 of them are showing trending, and this is an amazing thing in itself. So yeah, I'll do we're going to do a couple things. Right now, it's a little difficult. It probably will be just for the longer term forecast. I usually do it at the beginning of the month. We'll probably do that next week, maybe during, because this is the first, we're not even at the first yet, right? So we're saying the futures are showing some of the next for October 1st, but I need data to click over so I can do some of that analysis. So we'll definitely get into that, and we'll take a look at some of the expectations. But it's folks, I'm telling you, we probably have a heck of a month. If you spend 5 minutes on X, you'll see all the conspiracy stuff out there, the things that people are talking about that could happen. I mean, this hurricane thing was just disastrous. I mean, what a crazy situation that is. And as always, the Biden administration found $2.2 billion for the Ukraine, but they don't seem to have the money for the disasters. It's crazy, folks. This has to be over soon. Okay, so let's talk about a couple things. So just look at what occurred here in the markets. For September, S&P up 2%, NASDAQ up 2.6%. I don't have the number for the Russell, but the Dow Jones was up 8.2%. So a lot of these stocks that haven't been in play were actually coming back in pretty good. I'll cover I'll touch on the Russell here in a little bit, but the whole configuration of what I'm seeing going on here is just just this big, choppy, sideways range. Uh, the other thing that, so if we just look at today, it was basically negative until that last hour. We got the S&P up 0.42, NASDAQ up 0.38, and 9 of the 11 sectors finished in the positive zone today. And so from the WaveTech viewpoint, and I'll cover this in a few minutes, we're really looking at a much narrower participation than maybe the fact that 9 of the 12 were up really isn't that big of a deal. So let's do this. Just wanted the room to start to get filled up. Brad, you're right about that. Let me just I mean, this, John B, you're right. This is worse than Katrina by far. Anyway, boy, there's so much. Just real quick, I do want to announce something while I'm at the front end of this video instead of doing it at the end. Last Friday, we gathered on our private Discord. So if you bought the indicators, I'm working on getting a secondary group into Discord. I am planning going forward is every Friday at 2 o'clock, I'm going to do a meeting on Discord. It's kind of nice. We can do whatever we want. We can play music, yell, scream, have fun in that room. It's private, and you get an opportunity to ask questions and stuff. So there'll be a brief presentation and some Q&A. Last Friday, it was really just kind of a hangout, and we talked about a lot of stuff. We did get into markets. It'll be much more focused, and this is going to be an ongoing thing. I really want to start to move forward that community and try to get some of the posting boards and everything going and getting participant really going in there. So just want to put that out there. So private Discord, you should have a link. If you bought the indicators, can't find it, you want to get in there, I guess you send us an email, or maybe what we'll do is maybe let's do this before I generate all that email in our box, because there's quite a few people have bought the indicators that are not in the Discord or did not sign up for the Discord. I think it will be valuable as an educational piece. So let's set this up. I've said I've been hung up on this longshoreman thing, and I think this is a way bigger deal than anyone thought it would be. And I think what we're looking at here is the potential. And we saw this with the auto workers. We saw it with the UPS guys, a bit with the longshoremen on the West Coast. But these guys are crazy. Listen, I grew up my dad was blue collar worker. I grew up in a union house, okay? And but this is when you start to get a little bit of power, these people really are getting crazy. But let's watch this video. We'll come back and like I said, the voice might be a little out of sync just because I have to play it through on an open mic. But let's go ahead and let me set this up here. So I don't even know this guy's, here it is, union president. I don't even know his name. It's not important, but the message is clear. Let's take a listen. It is 2 minutes, 34 seconds. I might pause it as we go through it, but I do want to really listen closely. And they do have most of the leverage. So let's listen to this and come back, because I think this is significant what's going on here. And it's not even, it's being talked about, but not in the markets. Let's go.
This world, it's changing into the future. They're not making millions no more. They're making billions. And they're spending it fast as they make it. I want a piece of that for my men, because when they made their most money was during COVID. When my men had to go to work on those piers every single day, when everybody stayed home and went to work. Not my men. They died out there with the virus. We all got sick with the virus. We kept them going. From Canada to Maine to Texas, Great Lakes, Puerto Rico, now the Bahamas, everybody went to work during COVID. Nobody stayed home. Well, I want to be compensated for that. I'm not asking for the world. They know what I want. They know what I want. And if they don't, well, then I have to go into the street and we have to fight for what we rightfully deserve. These people today don't know what a strike is. When my men hit the streets, from Maine to Texas, every single port will lock down. You know what's going to happen? I'll tell you.
Real quick, you guys are hearing this fine, okay? Give me a thumbs up. I just don't. Go ahead.
First week, be all over the news every night, boom, boom. Second week, guys who sell cars can't sell cars because the cars ain't coming in off the ships. They get laid off. Third week, malls start closing down. They can't get the goods from China. They can't sell clothes. They can't do this. Everything in the United States comes on a ship. They go out of business. Construction workers get laid off because the materials aren't coming in. The steel's not coming in. The lumber's not coming in. They lose their job. Everybody's hating the longshoremen now because now they realize how important our jobs are. Now I have the president screaming at me, I'm putting a Taft-Hartley on you. Go ahead. Taft-Hartley means I have to go back to work for 90 days. That's a cooling off period. Do you think when I go back for 90 days, those men are going to go to work on that kid? It's going to cost the companies money to pay their salaries. Well, they went from 30 moves an hour maybe to 8. They're going to be like this. Who's going to win here in the long run? You're better off sitting down and let's get a contract and let's move on with this world. And in today's world, I'll cripple you. I will cripple you, and you have no idea what that means. Nobody does. But
All right, so there you go, folks. I saw that and I go, man, these guys are going to dig in. And I see some comments that we're good through Christmas. I'm not sure about that. I think that that there's some immediate effects. The store, it's going to be a little bit bigger than this. But here's the thing. Okay, so I'm gonna bring up some other things here, and some of the things I brought up in Substack. So we're gonna focus on this for just a few minutes. Okay, so let me go back over here. And so on Substack, I put this chart in last night. I've been talking about this for months, that sometime in September, October into November, that I was looking for a bounce in the, let me just go full screen here. I was looking for a bounce in inflation. So this is the year-over-year CPI. I push this out where this red arrow is around mid-2025, okay? Forecast could be right, wrong, who knows? But this is starting to show some upward pressure. And depending on, is this the trigger? And this has been my thoughts on this. The trigger that this is going to happen. It's a combination of things, okay? I believe it's not only this, but the central banks. These guys are jokers, right? I've given them an A+ going through all the last couple of years and sticking to the guns. But now they got, I know somebody was criticizing me on YouTube. I'm the one getting political. I'm not getting political. I'm watching the facts here. And I think they're pumping it, man. They're putting the foot down, trying to get some things going. But everybody's joining in. Name your central bank. Everybody is joining in on the party. Just like always, the U.S. dominates this stuff, and they trigger it, and it's like, okay, everything's fine. And it's not fine. I showed you a chart the other night. Possibly I'll bring it up here, just depending on how far I get down into this comments tonight. But this is, when you look at the inflation, the actual index, not the year-over-year returns. Everybody's, oh, it's only 2%. That's great. We're at a new projection, and I'm trying to remember if I can remember what day I put it on. If anybody's on watching, if you know what day I talked about this on Substack, I'll find it and bring it up. But what I was showing you is there's 3 different angles that have happened on the angle. There was from 1970s all the way through, I believe, 1980s, there was a flat angle of where inflation was increasing. Well, we got to, famous time 1980, there was the next angle, and that ran all the way into close to around 2000, maybe even into '08. And then we got to '08, there's another angle. Then we got the pandemic. Now we're on the sharpest angle ever of the debasement of the U.S. currency. I mean, this thing's going to be worthless. It's already almost worthless, right? I was just talking, listen, I'm an old guy, right? My first house, I think we paid $18,900 for. I remember I bought a brand new Volvo 242 DL, and it was $3,600. Okay, so now you move forward. Try buying a car for $3,600, brand new, and a name brand, and so what we're seeing here, this looks like, oh, no big deal, just a little blip. It's actually a bigger deal than I thought. So let me just see. I'm going to try very quickly to get this up, okay? So let me just do this, and I'll try to be as efficient as I can in bringing this up. I think we did it with PCE. Yeah. Yeah. So this is what I want to show you, okay? Let me see if I can get this crunched down. So this to me is significant. So we're going to go back. This chart goes way back. I'm trying to get it scaled, so bear with me. Okay. So if we go back, and I'll draw in a few things. I did this in Substack the other night, but I think it's worth bringing up because I think what we're looking at here is just this. So here's the angle from the 1960s. And by the way, this is where Bill Martin, right here, where I just drew this. Oh, let me get off screen here. Where this green line here is where Bill Martin, who was through this all the way back to 1950 to 1970, was the Federal Reserve Chairman. When he left, this is Arthur Burns. So this was basically this trend line here, right? So we pretty much tracked, let's just say into here. This is right into the 2008. Then we got another little angle. Then look at this, folks. This is your angle for the current, right? This is the current 2020 forward. So let me come back up. So this is my argument. They're tracking it at a 2% rate. By the way, this rate down here was 2%. It was about 2.4 during this next angle. So each one of these angles, they love this number 2%. It's just a quiet way to steal your money. And now this angle that we have right now, this is the actual index of the prices, not the year-over-year exchange. That's how they trick us. And I went through this the other day. And so, yeah. So, but then we come back. Let's just come back to Earth here for a second here, right? I think I made my point. Let me just, yeah. So what we're seeing from, as we look at this longshoreman's thing, right? They're going to jack this thing up at another level. And I actually think they don't care, because I think this is an opportunity, whether there's going to be a new administration, I hope, okay, that they are. And I think, but this inflation thing is not under control. I can't even begin to tell you. I was, that this whole thing broke down for me when the employment numbers were so inflated. I mean, I just, what little faith I did have in government agencies and all that from a reporting standpoint, what they're telling us just went down the tube for me. And it's really just blowing me up. And so now everything needs to be scrutinized. But just like I showed you just now, there is no, inflation is not getting better. It's not under control. Prices aren't going down. They're going to continue to, and some of that, what I was showing you a minute ago on that chart, was a forecast, okay? So the other thing I would tell you, and this goes back to 2020, 2021, and back when inflation was really accelerating. Those of you who've been around this channel for a while know part of what I was saying then was that one of the best inflation hedges is the S&P 500. It's been amazing. I remember people thought I was crazy back in 2021 saying, you know, I had projections for the S&P to go to 5,000 something, 5,200. Huh, imagine that. And it just seemed like a crazy thing to say. And like I said, we'll go into a longer term approach, but this stuff's just been on my mind that I saw one other thing just on this back to the longshoreman thing that somebody pointed out who runs a logistics company came in, not the union guys, but a guy that runs a logistics company. He said something that I thought was really interesting. There was another clip that I ran across earlier today, and he said the difference between in 2020, that was a demand shortage. Otherwise, we had all the supply chains got jammed up because everybody wanted something. We were all sitting at home. We wanted Pelotons, and we were never going to go to a workout facility again. And people went crazy and all of that. And that was a demand-driven supply chain disruption. This is the inverse potential of having basically there's no product to even get there. So this is worse than the other one. The other one was, hey, all the 100 boats were stacked up offshore. Well, they're going to be stacked up this time, but you know, if this thing crushes the demand and all that, then there's another thing. Then that's going to cause an issue. I've got one more chart I want to bring up. Let me just see if I can get it real quick here. Yeah. I think this is worth looking at as well. Let me come back up real quick. So this is just the unemployment rate, and we're over here where my cursor is right now. Let me just bring this up so you can see it a little better. But where these red dots are, you see as we go all the way out. Listen, these are we'll call them fictitious. They're so far out in the future, but the trend as you know what, I've got to revert this 1 second. Bear with me 1 second. I've got to put this to a monthly. This will get the context right. So this is 2025. We're hanging around this 4.2. I think we could see, I don't know if we see 4.4 as we come into Friday. We got employment coming out. I think these numbers could get a little bit bigger and continue to grow. And if this, think about this, it takes a while. Let's say that longshoremen go out and they're on strike. Some of these numbers aren't going to hit, but there's going to be numbers. So we're not going to see it in claims. We're not going to see it in continuing claims. We're not going to see it in unemployment numbers. Maybe we see an impact as we come 1 month out, right? So this is going to be beyond the election, all this stuff. I mean, this, if you wanted to orchestrate a cluster, this is probably the best way to do it. So, but what's happening is it looks like the trend is potentially going to be higher unemployment numbers as we come into potentially 25, 27 and beyond. And I think, yeah, so, yeah, it's very interesting. I see somebody talking about a $24 target for Tesla. Yeah, Tesla sales are plummeting again. So I know Elon just won a deal for hyping FSD, which he did, but he got away with it again. Like I said, he's the best hype artist. I think the guy's brilliant, don't get me wrong. But boy, when it comes to running companies, he's a very interesting guy. Yeah. So anyway, yeah, I don't know that that's kind of a ridiculous, but that's certainly possible. But I wanted to go through some of these metrics, and this ends up to be more of a macro event tonight that we have. There's just way too much going on. We'll get into. I'm about 25 minutes in. We haven't even looked at a market yet, but I think this was worth discussing. I appreciate everybody the comments here. I wish I had time to read them. Um, yeah, so the one comment going back to the union guy, he did say, do a Taft-Hartley on me, and that's exactly what they'll do. They'll show up for work. He said it. The companies are going to have to pay, and instead of them doing 30 an hour, they'll do 8. And I did see one more thing. There was a truck driver saying that these guys are already dogging it at the gates. They're already not wanting to work, and so the whole system is backed up. I saw also the West Coast, 2 terminals at the West Coast today. These guys are backed up forever already, so everybody's trying to move everything to the West Coast. Everything's going to get jammed up. How crazy it gets, I don't know. I know I see a comment from Todd, and they're eating the cats. Yeah. But anyway, listen, folks, this is a big deal. Does it get out of control? I don't know. I mean, we have I don't know who's running the company. I guess it's handy if you can wear earrings, if you know what I mean, and communicate through the earrings. Always nice to have Obama in your ear. But the point is, these trends are not friendly, and I haven't really talked much about this whole soft landing thing. I thought the Fed was doing a pretty good job, and I did look at some long-term charts, so maybe I'll just try to get out of this loop I'm in, and we'll go on and let's take a look. I'll go ahead and we'll talk a little bit about the database. So let's set the rest of this next 30 minutes up. We'll do database. I'll dig into the S&P. We need to talk a little bit about interest rates because it looks like to me we still have some upside on the back end of the curve. So I've got a couple of things loaded up. We could go for a couple hours tonight. I wish I had the time, but it will. I like that. Yeah, listen. Yeah, I won't go there. Tesla as a car, I'm not impressed. Okay, and yes, I've driven, and yes, I've spent a fair amount of time in them. All right, so let's go ahead and let's dig into let's go ahead for the database here. So I'll just stay on screen. One of the things, we're at 69.05. We did have 558 new buys, 614 exits, which is basically a rotation in the percent bullish. Not a lot going on there. The sectors, we have 8 sectors long. Let's see here. We do have a new buy coming back in. Consumer non-cyclical is coming back in as a buy for tomorrow. So we're still seeing positive rotation in database. And I'm looking over here at the other screen for the live on my trading terminal, and we're looking at the 58.19 last trade on the S&P 500. But basically, let me go back to the weekly here because this is pretty phenomenal. We have 75% of the sectors long, otherwise 9 out of 12. We use the Thomson Reuters breakdown. Groups, we have 62% of all the industry groups are long, and then we got 82.04% long on the database. And I can tell you at this, what appears or feels like a late stage of a bull market, to have an 82%, this is, and getting this kind of traction on the intermediate is mind-boggling. A couple other stats on this page. Wish I could zoom in on this and make it a little more visible. But over here on the weekly optimized, typically our models hold for about 201 days, just short of a year on average. But what we're looking at, the current duration right now is 129. They're about 64% of the duration has been realized. But what's happening here is we've got some new things that have come in. So we went from 60%, so 20% of the database that is long right now is new positions. And so they're going to have, typically there's two things that happen with new positions. One, they get trend failures and they drop off the map, or if they get enough traction and they get beyond, typically between about 4 to 6 weeks, because most of these trades are holding for a year, if you're what I was just telling you. So what happens is when you get to that level, once you get beyond 4 to 6 weeks, those trades tend to carry more and more towards their mean holding and all that. So in this database, I can click on any symbol and I can see exactly. Let's just go to capital goods. I'll just pop this up here on the screen. So capital goods is showing me that typically it's only up 3%, but right now, let me get to the trade profile on this. This gives me everything in our database. I know these numbers are small, so I'll tell you, has a map that tells you what the typical holding period is. So this one is 162 trading days. A year is about 220 roughly. So this is like 3/4 of a year is a typical holding, and this is on a sector level, okay, so on index level, and then it tells us that the projected profit is around 15.8%, and the standard deviation is 30.69 is one standard dev. Average loss is 6.4, so it's got basically a better part of a 2+1 win-loss ratio. And everything in our database, doesn't matter what stock, all 15,000 items in here have these maps. So you can kind of get an expectation what you're likely to make, what the holding periods are. And this is why I've been able, if you've been around this channel for a little bit, if you go back a year ago in October, is when we started to see the database get traction. As we went into year end, we saw all of the other stuff start to come into play. And then, of course, in January, we were well above 42% on the database, suggesting we're going to get an elongated move. And I announced then, and you could go to my 2024 report that I did for the outlook for 2024, and basically calling for 2 back-to-back double-digit returns. And it doesn't look like that's wrong right now. And we'll go into the technicals very quickly here in a minute. But this database is just really solid yet. I'd like to punch holes in it, find a way to get bearish, try to do that, but there's no way to do that from here. And there's like I said, approximately 20% of the database is new trades, and of the other 60%, if you look at the rotation, another about 40, best I can estimate, about 40 to 44% of the database is fairly new, meaning the forward-looking holding period is very positive. So just can't get negative here. Like I said, I like a short trade like anyone. Some of the best trades I've had in my life have been short sales. So I would love to have one, but it doesn't look like there's one here at the moment. All right, so let's move on. Let's go ahead over and let's go ahead over and go to the futures. Might as well leave this up here. This is the monthly graph here, and I'm going to put the SPX up here just real quick because I can actually see the algos, and what we're still seeing these angles of attack on a monthly. So we'll do a little long-term outlook here. But you can see this is pretty much, let's just blow it up, pretty much a parabolic pattern that's unfold here. We've got a cluster of red dots up here. So this is the forecast tool for the next several months. It's showing a bit of a consolidation. The other thing that we have here is we have a final there's two fib targets in here on the monthly standpoint. There is 56.45, 59.08. So we are coming very close into that. This level here is at 59.08, and the monthly is suggesting, now this is cash, so I don't have the next tick on this. So let me just, let's just do this. So you can see the one thing that I think is interesting, and that's why I brought up the cash, is we have the V, potential inverted V pattern, okay? So I didn't really want to start on the long term, but that's where it was at. So let's, I'm going to show you, okay, so I've got to show you this, folks, and then we'll get into analysis. Let me just find this thing. This was, I took this snapshot earlier today, and this is, I'm just going to draw these in just very quickly here. So you'll see right here, all right, I'm going to have to make it different. So these little V's, when we get this, this is absolutely insane. We got them on across the board, all four of the PPMs. And this was being forecast. Those of you who have the indicators should have saw this. And then we got this vertical move here. So this right here lines up right here on that last red bar. So what it was forecasting is a turnaround. And I've told you folks before, typically after what I call the V bottom trade setup, you're going to get this next bar will make a slightly lower low, and you just buy it, back the truck up and buy it. So we got, this was just, I'm not sure what time, if there's a timestamp here. Yeah, 1900 was this timestamp. But this move here was a vertical move on just up here. So I mean, it was a classic. Okay, so let's go back to the real charts here. Let's go to a daily. So S&P daily, still trying to forecast that we're going to get this move down through the 10, but right now the value of, so if you're new around here, the scenario that tells you that the trend is likely to hold, we're at 0.22 on PPM1. That's this one with the white line. So everything's mapped out. White with represents the angle of attack on the 10-period moving average. And we came right down to there. We're still in trend mode. It bounced off of there. And this is overnight. We look at the range. 57.03 was the low. That value 57.08. So we traded through it and just reversed. Got the big reversal. That amazing turnaround here. Now this is actually the cash. So let me make sure I get the right contract up here. Okay, I did not. I had cash. So let's get into this just a little bit better. Yeah, so we still have these fib targets up here. They're still valid. We have PPM1 now at 0.20. So once you get to 0.25, all you have to do is hold a 0.15. As long as we're above 0.15, then the probabilities is that we will stay above that value of that 10-period moving average, which is 57.78 right now. The lows, if I get, that was the cash number I was giving you a minute ago. So yesterday we had 57.66, the 10-period moving average 57.67. We came right to it and bounced. And then we still have these three fib targets above here. Min target is 59.43. By the way, that maps out to that monthly target I just talked about, 59.06. I'm going off memory, so it was in that zone. What we're seeing from the PPMs is that the momentum is starting to bleed off, And this is what I've been talking about. These red dots are the patterns that are likely to unfold on a closing basis. So let me just blow this up so we can get this a little better. So it's forecasting that we're going to come down to this 21 period moving average. But the 21 period moving average is still rising. So we're coming up into this pattern. So each day that goes by, that number where we should bounce off is getting closer. You can see the pattern is, I've got this set for 14-day forecast into the future. And let's just double check. Yeah, so 16 future bars. Let's go 14. Let's change that to 14. But this is showing that we should come into this support range. There's no real downside here, and that makes sense if we're looking at the database being 69% on a short-term basis, 82% on a long-term basis. It's really, really, it's strong, okay? And the downside is limited. Like I said, I'd like to get negative here, and there's a big short. All I'm seeing is that we come into this pattern here. I'll draw it in, and all I'm seeing is this. As we're coming out of this is becoming somewhat of a distribution. The algos are suggesting we come into this rising number here. Maybe we trade in between the 10 and the 21, and then what we get from there is we probably get a move up, and then you get these fib targets up here. It's a perpetual machine, folks. I think it's crazy that how this market is traded. And this has been throughout the year. We've had a couple of blips, like the little sell-off in August and things of that sort. But on the big scheme of things, on the intermediate and longer-term trends, these were very much expected, and they caught themselves right where they needed to. I think the NASDAQ was even more accurate it came down to its 200 period moving average. And, we used to always talk about the dogs of the Dow. The dog of the market right now is still a Russell. It's just not going anywhere. I'm not saying there's not money to be made there. I'm just saying it's not going anywhere. It's not going to take over the markets. But this number here, these numbers are likely to be the scenario of what we're likely to continue to come in. I think ultimately we probably see, I just threw a circle up here, this is where we probably end up in some kind of trading range, and that trading range would include the possibilities and the probabilities of making new highs in the pattern, okay? So let's go to weekly real quick. I'm going to try to get where we at here. Wow, I went on and on, didn't I? Okay, let's just go here for the weekly. Weekly is also forecasting kind of a stall here. We do have 3 fib targets, 58.77. I talked about this in Substack. 58.77 to that 59, just had it up. 59.60 as a target. That's your target range for this rally. Then I think we back off. This is the intermediate charts. And if you don't get the Substack, get it. It's like $8 a month. It'd be pay month to month, and you can get it for a full year for $80. So it's kendallreport.substack.com. Get it. It's it's definitely a worthy thing. I wish I get it out earlier, but like tonight, I'm doing this stream late at night. I'm going to take a break, and then I'm going to come back in here, and I'm going to work for 2 or 3 hours. I spend a fair amount of time in researching, and I've told everybody before, I trade best when I'm writing. And one of the things when I'm writing research and doing all the stuff in YouTube videos, I'm on, that's where I'm the best. And so, but what we're seeing here on a weekly is we're at a point where we're likely to stall. We could still make these slightly new highs, but come in to this sideways pattern. So the next couple of weeks are going to be interesting to see how these patterns unfold, but that's the general setup right now. So we have about 15 minutes. Let's bring up the NASDAQ futures real quick. I'll leave it on weekly. Same kind of pattern. You see the red dots are just hanging in there, going sideways, locked within the ranges here, and we're looking at weekly support minimum 19,982, resistance 20,000 right now, 20,403. We get so far we've been up to 331, so we're probably likely to have a tight range. I know we've got a lot of news, right? We got all the ADP numbers. Listen, I didn't talk about it much earlier, but one of the things that I do believe is a better number to watch. I'm actually liking ADP numbers. They're not likely to be as influenced by these government agencies. I said if you were hanging around at the early part of this video, is that I've lost all faith at all in many of these government agencies that are reporting what's going on in the economy. It looks like they've just been cooking the books, folks. And now the Fed's acting and telling you that inflation's better. If you watch this, if you go back, if you just joined, slide the bar back and watch the beginning of the video. I'll show you why that's not the case. But the scenario of everything is we're at these peak levels. Like I said, it's amazing to me, going back to the WaveTech database, that we're seeing 82% bullish numbers when this thing is very mature. Let me just bump this up to a monthly chart real quick, because this really shows you what I'm talking about here. I mean, if you go back to 23, I've been putting up in the Substack. I put a watch list together with all of the major indexes and some ETFs and things, just so you can see what the position of the models is on an intermediate basis. A lot of the models bought back here in January, right? So if I come back over here and I go to our watch list, I want you to see this. If I come over here, here's Vanguard total that's been long since April of 23. Here's the Vanguard 500 IDX long. That was this year. Here's another one. February. The Qs have been long since February. It's up 60.89. Our last signal on an intermediate level, and yeah, so just crazy. A lot of stuff. 1120. That was the Russell actually came in on 1120. So we've been long the Russell. It's up 23% on the Russell. Everybody thinks the Russell trade started this year. It didn't. It started the end of last year, and it actually rotated in fairly well as we saw the database getting traction. So a lot of this stuff, 11/6, February. Here's another February of 23. Here's another MSCI came in on April of last year. But enough of that. What I wanted you to see that for is these indexes have been running. And if you've been paying attention, I always tell everybody for $3.80 a day, you could have made 60% on your money just on those signals, and it would have guided you through all the craziness, kept you out of trouble. Let me just look at a couple comments that you folks have, just see if there's yeah. So once again, just real quick, mark your calendar, 2 p.m. Friday, every Friday. We're going to meet on our private Discord. If you bought the indicators and you're signed up for Discord, I will schedule a meeting in there in the next day or so, like I did last week. And we'll do, I have plans on doing a presentation for probably a half hour or so, and then we'll do Q&A. It was awesome getting to talk to a bunch of you. all I did was announce this on Discord and I think there wasn't a lot of us, maybe 20, maybe 30 tops at one stage, but we're going to pack this room and really start doing some interactive education. Yeah, listen, I could do a whole show on what to beware of in with ETFs, by the way. So one of the things that I do with our product is and this is something I plan on teaching. Ultimately, we're going to do everything, I think, in Discord on education. It just seems like a good place where we can interact, we can talk, we can do those things. And even if you've not been in Discord, it's pretty simple. You just kind of log in and hang out, listen, and you can click on your mic and talk. And so it's pretty good stuff. Sort of like a Zoom meeting. But the whole thing that I do with ETFs is I go through and I do something called ETF hacking. So I shred them and build them. And I did this with IWM. I have something I call the dynamic 12. I picked 12 stocks out of the 2,000 symbols in IWM. And you can do absolutely amazing things. I think that portfolio is up 45%. And in fact, I can show you very quick on that. Here it is, dynamic dozen. This is the returns on this. You can see above me. This is the last couple years there, but we can look and see for the last 21 up 24, 26, up 16 and 22, and which was a rough year, right? 23 up 50%, 45.39% on these 12 stocks. I'll even show you what they are. And yeah, they're just right above where I'm sitting here. But these 12 stocks drove this returns. Now they have our buy and sell and our algos that are running the models. But regardless of that, these stocks have just screamed and made a lot of money. So, okay, back to it. But this is why I show you this graph. So one could argue here, and maybe I will at some stage, we're on the monthly NASDAQ 100, we're still seeing expansion of volatility on the market grid. So there's still some potential upside on this in a fairly big way. And maybe I believe I'm going to be able to I may not be able to do a video tomorrow because I have an appointment. I'm not sure when I'm going to get back. But if I get back in time, I'll try to do one tomorrow. If not, then there will be something on Wednesday. Okay, so just give you a heads up there. But the point of all of this stuff, we've only got about 7 more minutes to go, so I want to touch on the treasuries. But hey, just get the Substack, kendallreport.substack.com. I'm going to write this all up later tonight. Yeah, listen, I see somebody, just a couple, let me read a couple of comments here. Most of my work is with small companies. Yeah, that's fine. You know, there's some great companies out there that are small. You gotta pick them. You know, you can't. The problem with ETFs is, I remember when ETFs started to get traction years ago, it was another effort by Wall Street to make investing easy. And a good buddy of mine on the trading floor used to always say, it's never easy. So, the red dot is just a W. Somebody asked, what's the red dot, giving the red dot projections. It's just a WTAR. So if I come back here, so if I bring this up, all it is if I can get to the right button here, 1 second. keep getting chart settings. Let me see if I can find it. So all you do is take any of the WTARs and change the SMA from 10, or you can pick the 21. All you have to do is put it to 1. Leave all the settings alone. If you want to make the boxes, I made the little red dots, I think 6 pixels instead of 2, so they just look a little bigger. That's all I did. It's right there. And then you can, the forward forecast I put for 14 days. So it's pretty easy to do. Yeah. So, the indicators will work with the free subscription. Not real time, of course, because you have to get that. And by the way, let's just, all right, since we're at the end, I don't know why I always do this at the end, but let's go here. Okay, so we did a couple things here, folks. So this I guess how we'll probably close out, and I'll have a couple final comments. But we've been working hard. So we have, you can just buy them outright, $447. You get the whole suite. There's 19 of them. You get all the videos. We do have a bump for, I think, $47. You can get the seminar I did last year. We are going to probably be doing another mastermind, but now you get the Discord, so you can come in the Discord and learn there and ask questions. And then you can subscribe $49.97 a month. That's $564. I call that, doesn't even make sense to do that. We just put a subscription out there, or you can just rent to own for $39.97 a month. That's $479, slight premium over buying them outright. Cheapest way, buy them outright. You get them. Subscribe is out there because we've had people asking for it. I can't imagine that it doesn't make sense to do it. I think you just buy them, even rent to own, or you just buy them. And like I said, the Discord, now that we're really getting that, we'll be getting that Discord education going. That's the way to get started. And it's pretty simple. And with both the subscribe and rent to own, you get a 7-day free trial. So you get to try them. If you don't cancel, you know the drill. They take your money, or we take your money, and you can cancel both of them at any time. But just for the most part, that's how you can get a trial that way. So we try to do our best. There's limitations on what you can do with TradingView, and there's limitations with what we can do with our platforms we use as far as billing and all that stuff. Believe it or not, that looks simple, but it was a real pain in the butt, and literally weeks and weeks of work and trial and error and testing and all kinds of stuff. So yeah, so I see some 99% of self-modeling models fail. These are institutional models. These models that are still running right now around 18 billion, and I've done $250 billion over the years. These have been out of samples. So somebody made a comment the other day on the models, is that you tweak and adjust until they work. Nothing's been changed, not one line of code in these models since 1994. There was a cleanup in 96, but that is it. We've got clients that have used since 1998. I think our oldest client hanging around, or the ones who use it, is 2003. They've been on with us for a very long time. And so these models are, yeah, it's interesting because we could do a whole show talk about modeling, how we did our walk forward analysis, how we built them, how we tested them, how we walked forward in decades of real money. So there is a lot behind it, and I don't know if I put it 99%, but I'd go 95 anyway. I think that's a valid number. So we're definitely at the end. My little puppy's starting to bark at me. He hears me in the room. So anyway, yeah. So anyway, that's a good way to get going. Yeah, Jeff, it's interesting you bring that up because there intraday trading. That's what we're doing, and there's a couple things going. Green Garden Capital, good to see you on here. You were on the Discord the other day. Nice meeting you. Um, yeah, I think they work really good with Bitcoin. Somebody says they don't. But I think it. I think some of the crypto stuff. I've got a customer that swears by them, so maybe interpretation is the issue, Mr. Richard. So maybe come into the Discord and maybe we can unpack that. Love to kind of look at it. Yeah, give him a biscuit, right? Yeah, he's old and senile, and he forgets that I'm here. So I have to go out. I'm working from home because of my wife's illness, so that's the way that goes. Anyway, folks, I think we're out of the loop enough in analysis. So we didn't hit Bitcoin, but that'll be on Substack later. Like I said, I'm not sure about tomorrow, and um, but yeah, folks, we got a lot to go through for sure. Uh, I would just. Yeah, I just noticed on the as far as getting the indicators here, uh, yeah, you just it's kendallreport.com/indicators. You put the www up there because we've had some DNS issues. We had some crazy stuff going on where the email stopped working trying to do stuff. It's always it's never easy even running a company. Now I appreciate John B. Just looking here. Yeah, who was it? Just looking here. Yeah, Mr. Richard. I if you read the Substack, maybe that's what you should maybe spend. There is a 7-day trial on the Substack as well, so you can get that. I would just say. Completely called off the low to 67,000 from the 54 whatever the low was on Bitcoin the other day. It completely called and forecasted it perfectly. Um, yeah, I appreciate that. Save man and woman peace. That's funny. Um, yeah, tomorrow is that vice presidential debate. That ought to be interesting, huh? Man, is that guy Walt's weird or what? Is it just me? Is he awkward? I grew up with a guy that reminds me of just like, everything there. I'm not sure. I know. um, Yeah, actually, Jeffrey, I got to go back to your comment. That's actually be interesting to get if there was a way of trying to buy at the STX or sell at RTX and try to put that into the logic would be very interesting, actually. Um, yeah, no, he is weird, right? Um, yeah, Minnesotans. I can't. No offense to Minnesotans, I can't figure out why anyone lives. I grew up in Chicago. I know how cold it is. That's like next level. You guys are amazing people that live up there. I sold one of my race cars to a doctor in Minnesota, and was it Manteca now or something? I got it wrong. But anyway, yeah, I, I don't get it. I fooled you guys because I'm in an air conditioned room. It was 90 degrees here, but it's October, so I'm trying to look like it's October. Anyway, folks, a little bit over. Thanks for hanging out. Appreciate it. Yeah, so to get the Discord, um, you got to buy the indicators. It's a private room, okay? It's not a public room. The public rooms are too hard to maintain with bots and everything that shows up in those things. But so anyway, but it is a private room. So if, once again, if you did buy the indicators, you never went into Discord, I think what we'll do is we'll send out that that code, that link to the Discord, so you can get in and sign up to everybody that bought those. So if you get that link, you don't have to sign up again if you're in. Yeah. Anyway, I'm just looking at comments. Yeah, a few more hours to strike time. What do we got here? 2 hours. These guys are walking off. I haven't heard, at first today, just a quick comment before I leave, I thought that rally come in I didn't even think of the window dressing. I'm like, did they get a settlement? Is there something there? Nope. I think it's going to, definitely going to be popcorn time. We're going to have the strike going on. We got this terrible thing going on with the hurricane. I mean, what a sad event. Like I said, that makes Katrina look like a joke, and it wasn't a joke. I actually have had a really good client that lived in New Orleans and ended up living out with his sister in, I think, in Atlanta or something for like 6-7 months before he got back to his house. It was nuts. Yeah. Yeah, there will be, videos already on X. All right, cool. I mean, you got to love X, all right? I think it's probably the most revealing platform ever. Anyway, folks, appreciate everything. Thank you for showing up. And like I said, tomorrow night's kind of if I can, I will. I've got an appointment tomorrow afternoon. Not sure when I'm going to get back. If I get back in time, then I will definitely show up. I'll try to get out, especially it'd be fun to watch the debate on a channel. That would be kind of fun. All right, folks. Yeah, cool. Yeah, we're trading 18s on this stuff. Yeah. Anyway, thanks everyone. Talk to you soon. Have a great day. See you tomorrow, hopefully.